It's Tuesday, 4th of November 2025. Welcome to your news update on Blip Brief. Small, but almost everything updated every weekday. Welcome to your deep dive. We're unpacking the significance behind those headlines. So, yesterday, Indian markets, well, they closed a bit higher. Sensex up 0.1%, Nifty gained 0.2%. But, that stability, it came with a kind of warning sign for you, the trader.
Exactly. Yeah, the really interesting thing wasn't the index move itself, it was the India VIX. That VIX, the market's fear index, actually went up.
Right.
So if indices are creeping up but fear is also rising, well, it means traders are buying protection, hedging bets, signaling caution, maybe preparing for more volatility. Not exactly an all-in rally moment.
Like a pause, waiting for the next big thing.
Definitely. Investors are holding back, looking for a clearer catalyst.
Okay, so that cautious backdrop makes the huge rally we saw in public sector banks stand out even more, doesn't it? PSU banks were the top performers.
Oh, absolutely.
This feels like more than just good news, almost like a fundamental shift.
It really is a structural story building up, not just a single day's trading. PSU banks are having a real turnaround. You saw names like Bank of Baroda, Indian Bank leading the charge. The immediate trigger, very strong Q2 earnings, yes, but the deeper why is the fundamentals. Valuations are improving because that huge burden of non-performing assets, the NPAs, is finally coming down significantly.
So years of cleanup finally paying off.
Precisely. You're seeing that balance sheet repair bear fruit. And this resilience, it's changing how investors see their risk. That's why they've been outperforming private banks so much lately.
That idea of clarity, regulatory or fundamental, leads us nicely to the BSE stock. It surged, finishing up 2.6%. And this wasn't earnings-driven, right? It was about regulatory relief.
Purely regulatory relief, yeah. A direct response to uncertainty just evaporating. The surge happened right after SEBI, the regulator, assured everyone they wouldn't ban weekly options.
Oh, hi.
That certainty brought back the bulls in the derivative space. Those initial fears had really been weighing things down, but once that cloud lifted, confidence snapped right back.
So the lesson for you listening is how much the market craves predictability from regulators, especially in those complex areas like derivatives.
Absolutely critical.
Let's stick with regulatory and legal relief, but on the corporate side now. Because Vodafone Idea, or VISE, huge story. Stock surged nearly 10% yesterday. This feels like survival.
It is. It's basically a lifeline. The why is the Supreme Court allowing the government to craft a special package for VI's entire AGR liability.
The adjusted gross revenue, that massive overhang.
Exactly. That debt has been an existential threat for Vi. So the court permitting a review, a modification of how that debt is structured, even historical debt, that gives Vi the breathing room it desperately, desperately needed.
Okay, so here's the deeper question then. What kind of precedent does this set? A court-approved special package for huge historical liabilities. Could this apply elsewhere? Maybe infrastructure, power sector?
That is the key question, isn't it? It suggests that for companies considered strategically vital, the state and courts might step in with bespoke solutions. It hints at a policy approach focused on managing crises, especially when the problems stem from old regulatory issues rather than just letting things go into insolvency. Adds a sort of unexpected safety net for some key indebted sectors.
Interesting. And staying with telcos, more relief, this time for the parent company, Vodafone UK.
Yeah.
The income tax department dropped that huge, long-running transfer pricing case.
Yes, the 8,500 crore one. Big news.
Okay, break down transfer pricing for us quickly. Why is this withdrawal such a big deal?
Right, so transfer pricing is about how different parts of a multinational company price goods or services traded between themselves, say Vodafone India and Vodafone UK. Governments watch this closely because companies might try to shift profits to low-tax countries by manipulating these internal prices. This specific case involved the sale of Vodafone's call center business years ago, dropping that massive tax demand. It removes a huge financial question mark and, importantly, sends a really positive signal about tax stability for big foreign investors.
So relief for some, but not all. We also saw the Enforcement Directorate attach assets worth 7,545 crore linked to the Anil Ambani Group.
The other side of the regulatory coin. This attachment is tied to an ongoing investigation into alleged misuse of public funds. It underscores that while there might be relief for legacy issues like AGR or old tax cases, active probes into financial misconduct, especially involving public money, are still very much a high priority.
Okay, let's shift to companies just making serious money. Party Airtel, phenomenal Q2 results. Consolidated net profit surged 83%. What was behind that huge jump?
It's their strategy really playing out perfectly. Airtel focused hard on attracting higher paying customers, moving them up the value chain. And it worked. They added more premium subscribers, which meant much higher data use and, crucially, a jump in average revenue per user, or ARPU.
Ah, ARPU, the key metric.
Exactly. When you focus on value, not just subscriber numbers, you get these outsized profit increases. It shows pricing power is definitely back in the sector.
And from connectivity to consumption, Titan also delivered impressive numbers. Net profit up 59%. That's a hefty margin for retail.
It is. The main driver was strong domestic demand, particularly in their jewelry segment. And interestingly, this was helped by high gold prices. You might think high prices deter buyers.
Right, you'd expect the opposite.
But no. Gold's perception as a safe haven, combined with festive buying, pushed up both the value and volume of sales. It really points to the resilience of the high-end consumer right now. They seem unfazed by broader economic noise.
Okay, let's zoom out to the macro picture. Mixed signals here domestically.
Yeah.
The rupee, it slipped again against the U.S. dollar, down about 0.08%, near its all-time low. Why this continued pressure?
Well, it's a mix of things, really. You've still got foreign funds pulling money out, which drains liquidity. And globally, the U.S. dollar is just very strong. That's driven by high U.S. Treasury yields and those persistent U.S. inflation worries. It just sucks dollar liquidity out of emerging markets like India, making it tough for the rupee.
But internally, a small shift, maybe significant. Fresh rupee term deposit costs ticked up slightly, by 4 basis points. First rise in 6 months. What does that tiny increase tell us?
It's subtle, but yeah, it strongly suggests deposit rates might have hit their bottom. Why now? Tighter liquidity in the banking system is one reason, but more importantly, credit growth is picking up. Banks are lending more.
So they need the deposits.
Exactly. They have to compete harder for funds, pushing deposit costs up, even just marginally. It's the first real sign of market pressure forcing rates up, independent of what the central bank does.
Fascinating. So liquidity tightening here, yet global capital seems very keen on India long term. We saw a couple of massive FDI announcements.
Oh, the long-term conviction is definitely there, especially in energy and tech. Brookfield Asset Management, they're planning a $12 billion investment in Andhra Pradesh's renewable energy sector over 3 years. Huge commitment.
$12 billion, wow.
Yeah, one of the biggest ever in that space. And at the same time, KKR is set to ramp up its India investments significantly. They're deploying a large chunk of their $100 billion global fund into sectors like healthcare, tech, and renewables here.
So this isn't just quick trading money. This is long-term foundational investment.
Absolutely. It's betting on India's growth story for years to come.
And speaking of global interactions, a significant geopolitical move. India looks set to resume approvals for some Chinese imports, electronics, steel, after a 5-year freeze.
Right. This looks like a pragmatic move, a bit of a thaw. The stated reason is to help the domestic situation, boost local supply, meet that strong consumer demand we talked about with Titan, and importantly, ease some of those supply chain headaches that have been bothering local manufacturing.
So balancing geopolitics with economic needs.
Seems like it. A calculated adjustment.
Okay, let's pivot globally now. Wall Street, a very mixed session yesterday, tells a story in itself. NASDAQ up 0.46%, S&P 500 gained 0.17%, but the Dow Jones fell 0.48%.
That divergence is basically the AI trade dominating everything.
The AI effect.
Totally. Money rotated heavily into growth stocks fueled by AI excitement. Apple up 2%, Nvidia climbing 1.8%, Tesla surging 3%. This just overshadowed declines in the old economy sectors, industrials, energy, which are big components of the Dow. It's a market where future potential, especially AI-driven, is getting valued way higher than traditional cash flows.
And you saw that play out perfectly with Palantir, right? Stock fell almost 3% after hours, even though they crushed earnings estimates. Revenue up 63%, adjusted EPS up 110%. How does that happen?
That's the AI paradox in action. Palantir's results were objectively fantastic, but when a stock trades at such huge multiples, its valuation isn't just about this quarter. It's based on years of future expectations, the sort of intangible value of dominating AI. So even when the reality is stellar, if it doesn't meet the market's, frankly, almost impossible imagination of future growth, you get a negative reaction.
The bar is just impossibly high.
Exactly. Reality, even record-breaking reality, sometimes can't clear that hurdle.
And that paradox just highlights the mad scramble for the actual hardware powering AI. This arms race for advanced chips is just accelerating, isn't it?
Mhm.
Two massive deals just announced.
Yeah, it's all about locking down future supply. Amazon's cloud unit, AWS, signed a $38 billion seven-year deal with OpenAI, basically to ensure OpenAI has the compute power it needs.
38 billion.
And Microsoft, a separate $9.7 billion deal with data center operator Wiren. Again, focused entirely on getting access to those high-end NVIDIA chips. It shows the biggest players will pay almost anything to secure advanced compute. They see it as the key bottleneck for future tech dominance.
Okay, finally, let's touch on the major headwind in the U.S. that government shut down. Now day 34. Beyond the politics, what's the tangible impact?
Well, economically, it's creating a fog. The shutdown has stopped critical economic data releases. So economists, the Fed, everyone's flying blind trying to gauge the economy's health, jobs,
And it's
inflation,
huge uncertainty.
massive uncertainty for investment and planning, and logistically. It's getting serious. Major flight delays, cancellations, air traffic controllers calling in sick because they aren't getting paid. It risks really disrupting travel and supply chains.
Yeah, a critical point of uncertainty. Let's end on a more positive note, though.
Well,
A groundbreaking scientific innovation, potentially huge for Parkinson's disease treatment.
yes, this is really promising. Scientists at Duke and US revealed something called BrainStem. It's a revolutionary single-cell map of the developing human brain.
Like Google Maps for the brain, cell by cell.
Pretty much. And the key thing for Parkinson's is the incredible detail it provides specifically on dopamine neurons. Those are the cells the disease destroys. So having this high-def roadmap helps researchers understand exactly how these crucial cells develop and work. That could let them target the disease much earlier, maybe more precisely at the cellular level. It's a step closer to potential functional cures.
A precise cellular roadmap. That's a great reminder that innovation pushes forward, despite market swings or political jams.
Definitely. That intersection of big data, AI, and actual biology is where some incredibly exciting science is happening right now. Fundamental knowledge driving real change.
And just before you go, quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.